Hey traders, and welcome to the trading channel. First off, I just want to say thank you to those of you who have been a long-time subscriber and who have supported me here on my YouTube channel. I'm now coming up on 10,000 subscribers, so I just want to say thank you guys for that. And if you're new and you enjoy free educational content about Forex trading, then make sure that you hit that subscribe button in order to be alerted whenever I come out with new educational Forex videos. So in today's video, as you might have guessed from the title and from what you see on your screen, we're going to be talking about trading expectations versus trading reality. And I decided to do this video because of a comment I received on YouTube. This comment from an unspoken user, I'm not going to call anyone out, but he commented on a video where I was talking about a 60% a year return being a very good return for a trader. And in his words, 60% a year is a very bad return. And unfortunately, that's the same mindset that a lot of new traders come into the market with. So in today's video, we're going to talk a little bit about what you can actually expect from an equity curve. I'm going to show you guys my equity curve from the EAP that's based on the email analysis I send out. And we're also going to talk about how much 60% a year can really make you over the course of about 10 years. So all that and more whenever we get back from the intro and disclaimer. Sit tight and I'll be right back. Welcome back, guys. Alright, so as we were talking about before the intro and disclaimer, trading expectations are very different than the reality of actually trading. So when we come into the market as beginners, and I'm guilty of the same thing, guys, we honestly think that we're going to get rich within the first few months or at least within the first year, right? Everybody that comes in the market probably thinks that at some point. And it's not until we experience a few major losses that we realize that's probably not going to be the case. So today I hope I reach out to some of you who have those extremely high expectations and not to shoot them down, not at all. This can be a very lucrative business if you do it correctly. But expecting to double your money every month is only going to lead you to disappointment. So let's go ahead and begin like this. Speaking of the trader who thought that a 60% a year return was a bad thing, let's consider, and I'm going to bring up my calculator now, that you're a trader who starts an account with $10,000. And we're just using that because it's a very easy number to calculate with. And with $10,000 and a 60% return, you're looking at making about $6,000 that first year. But what we're going to do is keep that money in the account and assume that I make 60% every year for the next 10 years. So let's go ahead and do that math. The way we do that is by multiplying our starting balance, which was 10,000, times 1.6, and that'll equal a 60% return, which will give us 16,000. And I'll just do this a few more times. I'm actually going to do this 9 more times to show you guys what 10 years of compounding a 60% return would look like on a $10,000 account, and hopefully show you that 60% a year is not a bad return at all. So I'll go ahead and do that now.
You said the same thing I told ya. My eyes are clear, there's no secret. I wanna know, was it serious? I need it clear, my best friend. Isn't easy to show with the weight of the world on my shoulders. I know I told ya, it's the best light I know. It's not a game that I am playing, my love. Trying to hold my feeling, I don't know what's right.
Alright guys, so as you can see, at a 60% a year return on a $10,000 account and compounding that return, which just means not taking any money out of the account every year, just compounding what you make, that $10,000 account in 10 years with a 60% return would be at $1 million. And there may be some haters out there that go, oh, 10 years, that takes too long. But my question to them would be, what else are you going to do over the next 10 years that's going to make you $1 million? If you don't have any other plans to make $1 million over the next 10 years, I can promise you it's not just going to fall in your lap. Or at least it's very unlikely that $1 million is just going to fall from the sky. So with that being the case, guys, I would argue that 60% a year is a very, very good return on your money. And not just your money. At that point, you may could branch out and start talking to investors about getting some of their money and show them a track record of you making 60% a year for a couple of years, and that could dramatically speed up your process to becoming financially independent. And all this is just hypothetical, guys. I'm in no way promising you that you can make 60% a year, but I'm just arguing that 60% a year is not a bad return, as we can see here. So now that we've looked at that, let's head over to the spreadsheet from the EAP. By the way, EAP stands for Email Analysis Program, and if you want to learn a little more about that program, you can click the link in the top left-hand side of your screen or click the link in the description below the video. But right now we're going to head to that equity curve, and I'm going to show you guys what it looks like on an equity curve to go through a drawdown. And I'm going to try to show you guys what the reality of trading is. It's not these months filled with 60 to 100% every month. You know, there's months that you make nothing, and then there's months you make 5%. Sometimes you get a real good month and make 11 or 12, but they all combine at the end of the year. And obviously this is all depending on your skill level and risk appetite. There's many factors that go into it, but I want you guys to see what a professional trader's equity curve actually looks like. So let's head over to that equity curve now. All right, guys, so here we are on the EAP performance spreadsheet. And first I'll tell you how I plug these numbers in. So for the EAP, whenever someone is a member of that, they receive 3 to 5 emails per week. These emails contain analysis that I've done on a pair and my reason for entry, and I send this out before I actually enter the trade. So this is all as transparent as possible. And I'll show you guys what one of those emails look like now. So in these emails that I send out before I place the trade, I give traders a detailed description of why I'm placing that trade, which always matches up with the rules of the system they learn on the EAP members page, and also give them my entry, stop, and target level, again, to be as transparent as possible. So I also record this information, the wins, the losses, target 1 and target 2, in a separate spreadsheet, which is the EAP performance spreadsheet. So all of these numbers are based on emails that I've sent out to clients in email analysis in the email analysis program. So now that we know a little bit about the background of this, let's take a look down here at the equity curve and see what it looks like so far in 2017. So if I scroll down, you'll see that I have completely deleted the numbers here for the month of March, because I'm actually going to add those in later on in the video to show you guys what one good month can do for your trading. But if we scroll down, and this is all based on a 2% risk, by the way, guys. If we scroll down, you can see that January, which is going to be trades 1 through 16, was a month of pretty much back and forth trading. We had around 16 trades in the month of January, and the equity curve, as you can see, we went from our starting balance of 10,000 down to about 9,400, about a 6% drawdown there, and then barely skated back up above 10,000 to about 10,300, again back down, again back up, and ended the month right at break even. I think we were about $100 to the negative, or 1% to the negative at the end of January. And guys, that's a full month of trading where no money was made at all. Again, what we're talking about today, the reality of trading, the reality of an equity curve, is that every month is not going to be a 100% month. As I've just shown you, some months you may go without making money. That does not mean you're a terrible trader. And that does not mean that your year of trading is going to be bad, as you'll see later on in the video. So that was through the month of January. Now, if we check out February, going from trade number 16 to about 27, you can see we finally did get a little bump in our equity curve. We had a few good trades here, pushing us up to about a 10% return. And then we fluctuated around here at 10% before ending the month at a 7.9% return in February. So that's on average around 4% a month for the first 2 months of the year, which I'm in no way disappointed in. That's not necessarily a bad month, although this is a little less than what we were consistently making last year in the EAP. So I was hoping for a really good March, and fortunately that actually happened. So here we are in reality, right? We've seen that even as a professional trader, you have months that make absolutely no money, and then you can go 2 months and make very little money. You can make very little percentage gain on your account over a couple of months, right? You can have drawdowns. You can have periods of consolidation in your equity curve. As I said, every month is not a 10, 20, 100% month. But if you stick it out with your strategy, because the main reason most traders lose money is because they flip-flop back and forth between strategies. They'll start one, and guys, I'm guilty of it too. I'm speaking from experience here. They'll start a strategy, learn it, use it for 2 months, lose a little bit of money on that strategy, and go, oh, it's broken, push it to the side and start something new. And they go through this process over and over, and eventually either bleed their account dry or throw their hands in the air and say, Forex trading is not for me, or any type of trading is not for me. But what I'm going to do now is show you guys why it's so important to actually stick to your strategy and stick to your trading plan as long as you've tested it and it's proven to be profitable, which is something else you can learn more about in the EAP if you decide to join. There's actually a whole lesson on back testing and stuff. But anyway, let me show you what happened in the month of March, and as I said, why it's so important to stick to your plan. So through the month of February, we have a 7.9% return using a 2% risk based on the EAP emailed analysis. If I drag down my numbers here for March, you can see that in March, we had 8 winners and 1 loser, bringing our account total from 7.9% to 24.8%. You remember what I said earlier in the video? Some months we have 0, some months we have 3 to 4, and some months you get a very good string of winners and you can make a little more than 10%. But I think another large reason that traders lose money when they try to do this is because of disappointment, which comes from too high of expectations. So they get in the market, they see comments like the one that was under one of my videos that said 60% a year is not enough. Well, I just showed you guys that starting with a $10,000 account, compounding that account and making 60% a year can actually make you a millionaire over the course of 10 years. And that's numbers. That has nothing to do with me. That's math. And you also have people that say, and I've had these comments as well, oh, you're only making 4 to 5% a month? That's nothing. I make 20% a month every month, and it's consistent. Now, I'm not saying they're lying because I have no idea, nor do I really care whether or not they're making 20% a month. I just don't want them to be giving new traders or any traders false hope that 20% a month is a normal month. It's not. Not unless you're using some kind of wacky risk management plan and risking 10% a trade, which is just a great way to go broke, in my opinion. You're going to have months that make no money at all. You could have months that make 4 to 5%, and you could have months that make a little more than that. And also, guys, it's important to realize that in this video, I'm trying to break through to those of you who are either struggling to become profitable or are just now starting out in the trading industry. Just as with any skill, the more you do it, the more experience you get. For more experienced traders, they're a lot more likely to be able to have a year where they make 100% or more. But if you're just starting out, having the expectation of doubling an account really quickly is just going to give you false hope and ultimately lead to more disappointment and add to the emotional and psychological difficulty that already comes with trading. So as I said, this video is pointed towards those of you who are having trouble becoming profitable or just starting out. And I'm not trying to tell you that if you become a profitable trader, you'll never make over 60%. It's all based on your skill level and risk appetite. And again, I'm just trying to stress that that's not at all a bad return, as apparently some traders believe. And all of this only comes once you have a system that you've back tested that is proven to be profitable. And the reason you have to test it like that is so that you have faith in the system in order to withstand the drawdowns or the periods of consolidation like we saw in the first month of 2017 at the EAP. That was kind of major. There were a lot of people asking me what was going on because for the previous 6 months, we'd made a percentage gain on the account every single month. And then January 2017 came along and we literally made no gain in the account. So obviously a lot of newer traders were emailing me and asking what was going on. Was the system broken? And I had to explain all this to them as well. I hope that video was educational for you. I hope you all enjoyed it. I'm sorry there wasn't any charts in this video. But I'm going to be doing a structure-based video later on this afternoon and publishing it as well. This trader's comment under one of my YouTube videos just made me feel like I needed to produce a video like this just to help anyone who's struggling with those large expectations that ultimately lead to disappointment. Again, I'm not trying to disappoint anyone, but just remember, if you're making any money at all, you're doing better than 95% of people that try to do this. And if you're not making money yet, that's okay too. Be patient. It takes time. If you don't have a tested, proven to be profitable plan, might be a good idea not to trade. Maybe take a little bit of time and just educate yourself, whether that be through YouTube videos or paid programs, or just backtesting systems and strategies that you've come up with on your own in order to get faith in a system. That's gonna have to be your final step. That's gonna be the final hurdle you have to jump over. You can find successful strategies, but if you don't have faith in that strategy, if you can't survive the drawdowns of that strategy, it's gonna be very difficult to be a successful trader. So I'll leave you guys with that. If you liked what you saw in this video, make sure to click that like button for me. If you're new and you're not yet subscribed to this channel and you liked the video, make sure to click that subscribe button to be alerted when I come out with new educational content. Most of my videos are actually based on technical analysis and full of charts. This one was just a little bit different. But anyways, I hope you guys have a great weekend and a great rest of your trading week. I wish you the best of luck throughout all your future trades, and I'll talk to you guys next time.
I would watch you stare. I would watch you stare. Oh, but there's no one there. We can figure this out. Put your feet down. We are the lucky ones. Swallow your choice, it's done. Terrified of what's left remains unsaid until you break my mind. Until you break my thoughts.
Till you break my thought. I'm throwing wishes in the well in hopes that you will keep them for yourself. And know there was a time when we never let go.